As I said, there's no such thing as a free lunch with us, so you're going to have to... Right, everyone was looking at their phones, weren't they, during that, because, it was Trevor. But I hope it was fantastic, and I'm sure it's actually given you a lot of fuel for thoughts as well, and we're going to tap into those right now, because we're going to start our process of putting together the agenda, and you're all going to be part of that for Cape Town in June. So all of you, point your phones here, go and get yourself on Slido, which, can you do it off that? Can you see that? So you take a photo. Has everyone got it? Give it a few seconds. Everyone just nod your heads, mumble something, make sure. So we're going to do a bit of an interactive session, some word clouds, some bar chart type reactions. But they're pretty simple questions, but it will help us sort of come up with some ideas to go forward. So if everyone's got that, first, Trevor, please go back. we did think that Trevor might struggle with this, in fairness. So, first question. What types of sessions would you like to see more of at AHIF 2025? So, an open conversation with, that's sort of, you probably experienced that, a bit of one-on-one stuff. Any technology showcases, would that help matters? Country showcases, do you want to deep dive into some of these markets? Roundtable discussions, these are sort of smaller, if you haven't already been, smaller group work. Project pitches, so actual projects that might be available to look into and invest. And site visits, so if you want to make your votes, please. Everyone voted? Everyone happy? Should we see the results? The suspense. Country showcases. Oh. Interesting. Okay, we'll take that forward. So, next question. How do you address... what topics would you like to hear about in a workshop roundtable format? So, Trevor's probably given you quite a few ideas. Financing obviously comes up a lot in this one, but I don't want to influence anyone. But what sort of topics do you want to hear about in a workshop? You can put in words, put in single words if you wish, because then if they're repeated, you'll see it sort of coming up in a word cloud. Financing is big. Technology, that's interesting. AI. Risk. These might be things that the next session can bring up and have a discussion about on some of these. Everyone happy with what they've put in on that one? Any more for any more? Oh, it's still going. Awesome. Good. I'll leave it there. Some interesting words coming up there and ideas. Should we go on to the next slide? Who would be on your wish list of speakers for AHIF 2025? And don't say Dan Gotti, because we won't get him. Trevor. Always Trevor. Trevor, stop putting your name in. Cape Town. Any interesting sort of alternatives? Do you want to hear from maybe who work in the hotels, or, you know, the actual guys who, you know, sovereign wealth? If we're in South Africa, do REITs count? Would they be? No. Simon Sinek, yeah, I'll phone him up. Nice. We shall move on. Some interesting stuff there. Revenue management. Next slide. Let's move on. Some great ideas. Which destinations would you like to visit in an AHIF Market Day? So for those that joined otherwise, we're going to have our main events in Cape Town and Kenya going forward. If there were alternative markets that you would want to do a deep dive in, maybe see some projects, where might they be? Abidjan? Zambia? Morocco? Funnily, yeah, you would think that Egypt would be big. Yeah, you can see this. I think West Ham's going crazy on this, isn't he? Stop it. Interesting. Genuine emerging markets. And whoever put Disneyland in, you're not welcome anymore. But thank you for all your input. I think that's the last question. One more question before I hand over to Alain. So thank you for your attention. Would you participate in an AHIF briefing or meet at a greet at social event in London if we did something on Africa? Yes, we'd do a half-day briefing. Yes, we'll do a social event, or no. Where's London? Well, there's a conference there next week. But that's why we're asking. Thank you, everybody. I'm going to hand over to Alain now, who's going to introduce his panel. Thank you for your thoughts there. They really helped. Thank you. Come on up. Welcome.
Hi, everyone. Is that working? Yeah, it's working. Yeah? So maybe I'll call in Hamza, Khalil, and JS. So if you'd like to join me on the stage, and I think we'll introduce you. Got a great panel about the dynamics in the African investment landscape. So I'm sure we're going to have a great discussion. Hello. Hi.
Everyone loves you.
All right.
There's a timer there as well.
Yeah, with the 34 minutes to go. Okay, Khalil, welcome.
Thank you.
And I was initially thinking to introduce each of you, but I think it's going to be maybe much more efficient that you introduce yourselves as we do, and then we'll maybe a bit in the shorter time frame we have.
Sure.
And then we'll go straight into the questions. Got nice questions here.
Khalil Manji, based out of DRC. I represent CHIC. It's a hospitality company that was started about 5 years ago. We've got a few hotels, but the family's been in Congo for about 5 generations now. We are in retail, trading, F&B as well, construction, real estate development. We're entrepreneurs, And it was normal for us to diversify in different sectors in the real estate game. So we were doing mostly residential and commercial, and then we decided, why not hospitality? Was it a good decision or not? We'll find out soon enough. But yeah, pleasure to be here.
Hamza?
Bismillah ar-Rahman ar-Rahim. Hamza Farooqui from Millat. We own a large collection of hotels in South Africa, all branded as Hyatt. So we're one of the largest Hyatt owners, and really very active owners with a very operator-driven mindset, have a significant pipeline, privately funded family office. I'm a principal in the business, and significant growth aspirations in South Africa and inshallah beyond.
Hi, J.S. Anand from Leva Hotels, not funded by any one of them, but we have a couple of hotels coming up. We have 11 properties. We're in the lifestyle 3, 4, and 5-star segment. And right now we have presence in Dubai, Saudi, Nigeria, Abidjan, Zimbabwe, and Ivory Coast.
Really into lifestyle. I think my first question for Hamza, you forged significant relationships, in your hotels. I think you took the bold move in the middle of COVID to bring Hyatt to South Africa. So, I wanted you to share a little bit about your experience and how was that like in the middle of COVID?
So I think they're not an easy exercise because people thought that we're crazy. But, our thesis has always been that Africa travel is going to be becoming more and more relevant and sort of prominent. People have much greater disposable income. Post-COVID, people want to spend on experiences. And if there's one continent which can offer that right, it's Africa. Challenges, infrastructure, challenges, all of the issues we find in. We as Millat have taken a very significant stance to drive that with a global brand like Hyatt. And what's driven that has really been trust. We believe that the trust between the owner, the brand, is a very valuable commodity. And when the brand starts to trust you, when the brand understands that you're not going to tinker with the guest experience, when the brand understands that you're not going to tinker with guest safety, when the brand understands that you're going to elevate the guest experience, you're going to play to the drive around rate, positioning, experience, then I think you start getting the best of the brand engine. So that's been probably our learning, our experience, and probably what's going to make Millat stand out uniquely as this growth story in Africa happens and comes about over the coming years. Obviously, actualization, what Trevor spoke about, is really where we see a bottleneck, which is why our strategy is very much conversion driven, very much around where we see that opportunity set. So pretty much the portfolio we've driven in South Africa is a conversion-led strategy. The Park Hyatt that we're opening in the next, I think, 35 days is a conversion, which is very unique because in that luxury end of the segment, you don't have that play, but that's something that we have driven. So that's what's driving us and something which I think is going to stand out in the continent.
Okay. And in the case, where do you see your expansions? To focus on South Africa, or are you planning to go across the region?
So we'd love to go across the region. We believe that sort of the rest of Africa is huge opportunities around experience and what it offers. But this business is also very important to understand growth engine cycle. South Africa is still going to be Africa 101. If you can crack that code right, then your abilities to start driving yield, positioning, commercial engine, but also start having a base of talent and execution capability becomes real. So in our mind, we want to crack South Africa, that's the most developed market, and then build hopefully to the rest of Africa. But Africa is very much on our radar and a very important market that we want to drive on.
Great. Maybe the next one for you, Khalil. I mean, you've spearheaded the development of international hotels in the Democratic Republic of Congo. And I believe you're the largest partner of Accor over there. How has this experience been, and especially how have you been able to implement the standards? I guess it's not an easy ride over there.
Yeah. No, as Hamza said, you have to crack the code, right? So yes, we are the second largest partner of Accor in Africa today, with 5 properties, 2 that are already open. We're the largest partner of Accor in Congo, and that's one of the ways why we chose Accor was for that excellence, for that expertise. Whatever we do in Congo today, the family's vision has always been to do it well. And we wanted to do it well. We didn't want to start something and not doing to the full extent. So what we decided to do was, partner up with Accor. And then what we also did is that because we've got our own construction company, that alleviated a bit of the issues that some people do have in Africa building and then running out of money because we control cost as well. And I think over the years and over the projects, we've managed to bring the cost down. So that helped out a lot. But we did crack the code. I mean, if I may say, we did crack the code for Congo, and I think that we would like to do more. But yeah, it wasn't easy. We have our obstacles, our challenges. Easier to do to build hotels in South Africa because there is local expertise. Congo, everything is imported. So yeah, but alhamdulillah, we've done well, and I think the end result with the 2 hotels that have already been opened shows exactly that. We use the best consultants, the best construction material. We tapped into the knowledge and the expertise of quite a lot of people.
And all new builds or some conversions opportunities over there?
So 4 of them are new builds. 1 conversion, which was supposed to be an Accor hotel by coincidence, but the project had stood still since '91. We bought over the property, and it was supposed to be a Novotel, but with today's standards, and we're very stringent on standards. We didn't do any shortcuts, and I think Accor can attest to that, and it's some of their best properties in Africa today. So it is a refurb from a Novotel to an Ibis because we just couldn't bring in the standards of Novotel in that property anymore.
Okay. And you'll be looking at expanding beyond Congo, or you
Look,
just focus there right now?
We're all entrepreneurs, right? So if good opportunities are out there, we will go for them. But we've cracked the code for DRC, and we know that there is more opportunities. We're only in 4 cities in DRC. There's many more. Kinshasa today, we're looking at 24 boroughs, and both of our properties are in 1 single borough. So I think we can expand there, and our construction teams are there. Although we're 3 partners and we're present in 6 other African countries, and through family relations, and we've got access to 6 other African countries, so 12 in total. We have looked at other African countries, but as Trevor said, Nigeria, beginning of the year till today, it's the value of that property has gone down by 4 times in international currency. So we earn in dollars, we spend in dollars. So going to a place like Kenya that has gone from 100 to 160 shillings and back to 140, we've alleviated that in Congo because most of the economy is in dollar.
Okay, thank you. JS, so you're the operator here. Where do you see the opportunities, and what value do you bring with Leva Hotels? I understand, I mean, you've put in lots of your 30 plus years of experience into Leva. I think the concept is quite unique, and it's got your personal touch. Where do you see your opportunities coming as an operator on those?
See, we built the brand about 5 years back, and we don't believe that markets, I've seen most of the global brands that go into these markets are looking at numbers. We identify the clear needs. Let's take Lagos, for example. There are very few branded properties in Lagos because Lagos has 2 sides. One is Wick Island, one the island, and mainland. And typically, like Trevor mentioned, I mean, we were supposed to open our first 5-star in the first quarter of 2025, but we are about a year away, post-January 2025, so it's going to take us a year and a bit. We have seen Côte d'Ivoire, we've seen Ivory Coast. We are looking at different parts of Ivory Coast, like Jacqueville, Grand Bassam, the main city itself. I think in terms of brand penetration, we have looked at markets which clearly have opportunity, not by numbers, but by the needs. And there's a lot of gaps. You've got to look at a logical 5-star or 4-star hotel in Zimbabwe. It doesn't exist.
So mostly existing properties that you take over and rebrand?
For the moment, out of the 11 assets that we have signed, 7 are greenfield, 4 are ready.
Okay.
So most of the ones in East and West Africa, because we just signed one in Uganda, which is a small boutique-ish kind of product. But you see, we are a boutique firm. We're very small. We don't go with like we're going to get 150,000 rooms in this market. We've got a very small, finite team. We have looked at Zimbabwe, 3 cities. We have looked at Bulawayo. We have looked at Vic Falls. We have looked at Harare. All of them have opportunities. Now, for a brand like ours, who's not funded necessarily, you need a combination of conversions and new builds. You can't survive otherwise. And let's say, for example, Uganda's been a great opportunity. It's a much more healthier market. We bring uniqueness. We bring a lot more in terms of, we don't go with the bells and whistles. We don't want to look at, luxury is not there at the moment in terms of in these markets. I think the basic foundation of 3 and 4 stars also doesn't exist. That needs to be worked on. So we look at opportunity markets, and again, human capital is a big challenge. Training is a big challenge. So I think as brands, we need to look at the product as a whole, not necessarily only getting a brands in there. So you've got to localize, you've got to understand that the local human capital needs that support, the process, the service levels, that we do it as a combination of the whole package.
Okay. Yeah, thank you. Yeah, you're actually addressing before my next question, which was to understand how you maintain the service while scaling up, right? Because as you're still a young brand, how do you maintain that service as you expand in various countries? It's always quite difficult.
See, I think service is a relative aspect in terms of if you bring technology into being. Technology is mainly a process to just ease a check-in or a certain service that you can provide through technology. At the end of the day, the human touch is required. So if there are 1,100 properties in Dubai, and we managed to become #1 on TripAdvisor with our first flagship hotel. So there is something that we do right in terms of the management structure, in terms of limited, sort of key aspects that we focus on. I think guest satisfaction is a very wide, and everybody says, how are you unique? There's nothing unique about hospitality. I mean, you can have tons of different kind of decors. You can make it as fancy as you want. The aspect that goes into being is the guest wants an experience. Yeah. Guest wants true hospitality.
Just back a little bit, thank you. Back a little bit to asset management and investments. Hamza, you're quite well known for saying it as it is, right? And I've been curious, I didn't ask you on the sides. I was curious to understand a little bit, what happened. You did a massive change of operator from Hilton to Hyatt. What prompted that change, and can you see any difference between, 2 of the big ones?
So I think the answer lies from within. I've had a very long entrepreneurial sort of journey. I've done many interesting things in my life. But I was, probably for the last 10 years, an ego trophy owner. I believed I was the best thing after sliced bread. I believe I am the owner. I own hotels, and I believe that the brand should just listen to what I say. And it's really during the middle of COVID when your hotel is shut and it's an empty shell where you realize not just where this business is about, but the importance of people. You understand that as owners, you need to take a very different outlook if you really want to be in this business. You need to relook at your priorities. You need to relook at how you interact with the brand. You need to think about how you deal with your people. And that probably was the biggest turning block for me. We made a shift from Hilton to Hyatt. We were credited as a group to curating the first Conrad. We owned the Conrad Pazula, but these were all assets I had built when Millat and Hamza Farooqui was very much a trophy owner. And that shift from being a trophy owner to being an owner who realizes, I genuinely want to be in this business. I genuinely am going to create culture, people, organization. I'm going to build something special. And when you do that, when you realize that you're in a beautiful country like South Africa with great produce, with great opportunity, I think that's when the opportunity came about and I saw significant dislocation. And we built a very meaningful relationship with Hyatt. So I'll never say it was anybody's fault. I believe all the brands are very competent. I believe they're all very good. But it's the driver who's driving the steering who needs to know what to get out of the brand. And I think that's the biggest lesson we've learned as a group. We believe we've curated a very significant formula of how to understand the brand right for Africa. We are in a position where we're able to tell the brand what works and doesn't work for Africa. We're able to have very meaningful conversations. So I think we're very happy. Hopefully the brand is also happy. And that's going to set a very important foundation. So I'm not going to say which brand is good or bad, or I'm actually going to say it starts with you, and you as an owner must take accountability. Far too much time is spent on these podiums where we brand bash and we say the brands take fees, and yeah, that's great. But we must start looking in from within. The capital providers, the owners need to start looking in from within and making that change and putting people first and making real action there. And then I think the rest of the industry will flow.
Okay, I understand you're very hands-on, right? You're into your properties and you make sure it happens, right?
Thoughtfully though, right? Because at the end of the day, you can't be hands-on and you've got to build a structure, you've got to build a platform. This is, also not a complicated business, right? Creating guest satisfaction is not complicated, but to do it meaningfully, thoughtfully, and profitably is where the secret sauce is. And sometimes it's the small things which matter. But if you don't create the culture, if you don't create the platform, you will never succeed. Many owners are hands-on, but they're so hands-on, they come in every day, check what the buffet has and sort of make changes. That's also not what this business is about. It's about being hands-on in a constructive and a meaningful, thoughtful fashion, which I think is very important.
That's when you need asset managers, right? Khalil, and I was thinking that other question for you, how local do you need to be in your markets, and what would you say to investors who want to come, and invest in Africa? Do they need, is it even possible? For example, you're Kuwaiti. I used to be CEO of Action Hotels. So you imagine your Action Hotels, you want to come into Africa. I could imagine the soft and hard barriers to entry, but is it actually feasible? Do you need a local partner? And what would be your recommendation to bring, capital from outside, and how?
Look, every African country is different. I think when we say Africa, it's not North America, it's not Canada, where you can copy-paste everything like Europe. But the culture in South Africa is different, the culture in Congo is different, and some countries are easier to do business than others. Today, if I looked at Kenya, I would say I can do it myself. I don't need a local partner. In a place like Congo, without a local partner, without having that local know-how, I don't see anyone entering and being able to do what I did, especially because I think I was successful because I had my own construction company. If I did not have my own construction company, I don't think I would have done that project. And it's an actual fact in many African countries. At AHIF 2 years ago, somebody from Nigeria said the exact same thing. It was that progression, that from a construction company, we were doing resi commercial, and we said, because we've got the expertise, we can do a hotel. And if I hadn't done that, if I hadn't had my company, I wouldn't do it. But to answer what you said is, in Africa, there are countries where it is easier to do business than others. In Congo, not easy at all. In Morocco, very easy. So it all depends where you are going in Africa. And then being African, I think it's easier for me to do business in Africa than it would be for a Kuwaiti or anybody else.
Sure. Hamza, you also have your construction company, right?
So no construction company, but we have in-house development. So we manage a lot of our development and sort of asset management piece in-house with a great professional team, because we have a large conversion part. But I think authenticity is becoming very important. The localization, the days of the European, and no offense to anybody, but the day of the German-speaking red sort of handkerchief GM creating an empire is long gone. I think this is a time where you want to breed local talent, you want to breed sort of local experience. I'm a great believer that institutional capital is going to come to Africa, primarily because growth pockets are limiting in the rest of the world. Challenge is, who are the jockeys that they're going to pick? Because there's no way they're going to figure out empowerment, localization, labor laws in the most structural fashion. And one of the things we have done, and as the Millat story grows to the next level, we've got a family office platform which has South African assets, but the family office is domiciled out of DIFC, because one of the things we now want to build on is how do we build that next level of institutional capital to tap into the continent. And I think the entrepreneurs who can present themselves as credible jockeys who've got credible brands, but also have got the right institutional platform around them, is, I think, going to be really relevant. And I think that's something we at Millat over the coming months and years are going to be working very hard on building as we grow to the next chapter in our journey. But I think that platform and that jockey is what that institutional capital needs. I don't see the sovereigns going randomly because they want to be in one of these African countries or there's a state visit. I think it's going to take a lot of concerted effort by the jockeys themselves, by being able to position themselves smartly, and that's something we believe we'll be working very hard on over the next coming months.
Yeah, we've seen a few, right? We've seen Westmont, people like Casada with the Qataris, etc., but they're present clearly locally, right?
That's correct. But at the end of the day, that's also, in my mind, a very fragmented approach. It's a brand-centered, fragmented, approach. I believe a broader approach, and there's enough institutional capital out there. Also, don't forget America, right? The large U.S. funds are at some point in time going to tap into growth in these markets, and they're going to have to. But I think as an industry, that's what we need to drive with some of these brands. How do we start tapping into that institutional market? How do we bring the large institutional managers into the African continent and getting them to play? And I think that when that happens, you'll start seeing an ecosystem opening up significantly into the market space.
It's probably hard to generalize, but what's here the growth in the GCC, the growth is really being pushed by the governments, right? So they'll announce, a 10-year vision, and they'll be driving mega events, etc., and promoting tourism. You see the governments in your area doing, anything to try to push investments into Africa, or is mostly driven still by the private sector?
I think it's a bit of both.
Yeah.
I think it's a bit of both.
It's many countries, right?
In terms of Congo, yes, the government is doing a lot. The new president has been in power. It's his second term. He's been traveling more outside than inside. So he's had 22 state visits since the beginning of the year. So he is trying to promote the country. And we're seeing more and more establishment of new diplomatic corps in Congo. So that's a good sign as well. And in terms of institutional financing, we're seeing it because we're getting approached, which was never the case back in the days. So I think, yes, the government is doing a lot, but the private sector is doing a lot as well. We have to picture ourselves and we have to shape ourselves to fit that mold that people want to see in order to enter and to partner and to finance our projects as well.
We're definitely seeing in Egypt, for example, we just did a big work for the Egyptian sovereign fund, and that acquisition of ADQ, but you're seeing more flows from money coming from, GCC into Morocco and Egypt than we're seeing into, sub-Saharan Africa. The thing is going to come, it's going to start.
So I think it's going to come. My just quick view is I don't rely on government for anything. The one thing in this tourism business people have to change is government is not going to do anything. They have a lot of other issues to fix. I believe in taking charge of my own destiny. So you know what? They must fix the bigger issues. They must fix airlift. They must fix visas. But if entrepreneurs and jockeys aren't going to take charge of their own future, and aren't going to create their own ecosystem, don't be in this business. So for me, I've built my own platform, my own piece. I didn't rely on South African government for anything. They create an enabling framework, great. They don't, my story still moves on. And when you come in with that approach, institutional capital will follow you, because you know what? Then you've got skin on the game, you've got fire in the belly, and that's what capital wants to see today. Capital doesn't want to see cushy enabling framework today. That's how the US today built institutional framework in the hotel space. And I think Africa needs to start taking that approach, that mindset, rather than waiting for government, when will you do this? When will that happen? It's not going to happen. Move on, take charge, and then you'll build an ecosystem which works.
Yeah. Right. Thank you very much. I think we could go on for a while longer, but I think the time's up. Thank you.
Thank you.